Hi friends, this is Kamal Shah from Switcharts Consultancy Private Limited. Switcharts is into training on technical analysis, and we have started with the series on Introduction to Candlesticks. This is going to be the third video in the same series. In this video, we are going to take you through advanced double candlesticks, right? So what we saw in the earlier one was advanced single candlesticks, right? Hope you have seen that video. In case if you have missed it, I would recommend first to go through the video on advanced single candlesticks. So now let's move on to the advanced double candlesticks pattern. So now this is going to be the first pattern in the advanced double candlesticks. It is called as dark cloud cover, and it is bearish in nature. Hope you know what does it mean. Bearish means we are expecting the price to fall, right? So now let's understand what is this pattern all about. So when there is a green candle, hope we know the basics of the green and the red color. So when there is a previous day, so say if today is Tuesday, so this particular green candle is of Monday. So Monday there was a good green day, and then on Tuesday what happens is the market opens higher. So this was the close of Monday. It opens higher, and then it might make a new intraday high, and then it comes down and closes around this level. Now whenever, understand this point very clearly, whenever this red candle closes below 50% of the green candle, right? So when we see this, that particular red candle is below 50% of the green candle, so this is the 50% mark, and when I close below this and above the open of the green candle, so this is the open, this is the close, right, and this is at more than 50% of my green candle, this pattern is bearish in nature, and it's called as dark cloud cover. What is it called? Dark cloud cover, right? So this is a major reversal signal in market. Okay, now let's see the bullish pattern with the similar type of setup. So now in this case, if you see that there was Monday was a bad day, it was a red candle, right? And then the close was here somewhere, and on Tuesday it opens lower than the previous day's close, and then the bulls get in charge and they cover till here. So again in this case, more than 50% of this red candle has been taken out by the bulls in this green candle, and such pattern is called as a piercing pattern, right? So this piercing pattern again is a strong reversal signal, and this particular type of formation is bullish in nature, right? So the first one we saw was dark cloud cover, which was bearish in nature. This is piercing pattern, and this is bullish in nature, right? Now let's see third pattern. So this is called as engulfing pattern. This is a bearish engulfing pattern, because if we see that the previous day, or in our example as we are talking about Monday was a good green candle, but what happens on Tuesday is my candle starts, so there is a gap up opening, so I have a opening out here, I might have a new intraday high, and then throughout the day the bears come into charge and they close even below the open of my previous day. So if you see that this red candle entirely is actually engulfing this green candle of the previous day, and when we have a green on the first day and red on the second day, which is eating up the entire green candle, it is called as bearish engulfing pattern, right? It is called as bearish engulfing pattern, and it is a major reversal signal because now the bears have the upper hand and they are striking with good price movement, right? The opposite of this bearish engulfing pattern is bullish engulfing pattern. In this case, if you see, the difference is that the red color is on Monday. So we had Monday we had a red color candle, and then on Tuesday we see that there was a gap down opening, but then the entire day the bulls took the charge and they made the close which was even higher than the open of the previous day, right? So when this happens, there is a huge buying pressure in the market and the bulls are in total control. This is also a major reversal signal, right? And then we see another two important advanced double candlestick pattern. This one is called as Tweezer top, right? So if people might have been aware of something like as double top, double bottom, this is what we are actually trying to share here. So Tweezer tops, it can be two consecutive candles like this, where my close is say at this level and my open in the next day is the same level or around the same level, and then I have a opposite day, right? So this was a good day and here I have a bad day. So this can be treated as a tweezer top. This tweezer top is normally considered as bearish in nature, and from here we might see the price falling further down, right? So this is the bearish candlestick pattern. And understand one thing, you can have something like this which is side by side, and it can be also between two different peaks, right? I am going to share one bonus video in this series where I will take you through the actual charts on the software, and I will show you what each candle actually means onto the chart and how it appears on the chart, right? And then also what you can see is how the market has reacted once you see such patterns onto the chart, right? So keep listening to these videos. And the last candle in this formation is tweezer bottom. So this tweezer bottom, if you have to name it very commonly, it is called as double bottom as well. In this case, again, if you see that there is a red candle and then there is a green candle, so this is again bullish in nature, right? And since this is bullish in nature, the price is then tending to move up after such candlestick pattern appears in the chart. And this particular tweezer bottom again can be consecutive candle like this, or can be separated as well, right? And we will see that again in the video once we have with the real charts, right? So hope this video was helpful to you on the advanced double candlestick patterns. Like our YouTube channel Sway Charts for more and more videos. Thank you, friends.